What's up, you guys, and welcome to another episode of Drive to Thrive. In today's video, I'm going to be talking about four stocks that have a potential to give you returns anywhere between 30% and 150% over the next couple of years, possibly way less than that. So, if you want to find out about these stocks, then let's stop wasting any more time and let's go over to my computer. All right, y'all, let's take a look at our first stock here, which is Akerna, trading under the acronym KERN. So I really like Akerna because it's very predictable and has this beautiful range between the $3.80 level all the way up to $10, and this is the kind of stocks I look for because they are somewhat predictable and you can structure the trade nicely. So if we are looking, the kind of returns we're looking on this particular stock is, if you buy it at these levels at 351 as of today and it goes up to the $10 level, you're looking at 180% return. If it goes up to that $11, $12 mark, then you're looking at 200+% return, which is why I really like Akerna and I'm bringing it up. If we dive a little bit into the technicals here, so on a daily we are kind of in this bearish momentum, as of today, but this is on a daily chart. Things could turn around quickly. Our stochastic is down over the oversold level, which is something that we want to see. Our on the weekly, our stochastic again is over at the oversold level, which is awesome. Our MACD is close to the zero line, so this is why I'm bringing up Akerna. Now let's take a look at our second stock, which is Barrick Gold, and I'll be breaking down Barrick on the TSX, but you can also buy Barrick on the New York Stock Exchange under the acronym GOLD. So let's go back to the TSX chart here, and the reason why I'm showing you guys Barrick Gold, because I think with all this money printing that's going on around the world and all this inflation talk happening, gold is going to be a great hedge against inflation, and mining stocks I think are going to do great for the next couple of years, especially when this next gold bull run comes to its peak. So if we take a look at monthly here, so if we go all the way up to monthly, which goes to 98, we see that we have the super strong support level at around that $23, $24 level. And as you can tell, back in February we came down to these levels of 23.72 and we have this nice bounce up ever since then. Now we have the 200-day in our wave right now, but I think with all this momentum that's going to happen, especially if I go back to this weekly chart, we can tell we got lots of room for the stochastic to run up to that overbought territory, and we also have the MACD, around that zero mark, still in the bullish momentum. So that is why I really like Barrick for next couple of years here. And as a bonus, Barrick Gold also does pay dividends on the TSX, which is about 1.46%, and on the New York Stock Exchange is about the same, 1.46%. So the kind of returns that I am looking for again, and I'm planning to hold this stock for the next couple of years, is anything between 75% and as high as possibly 90%, and higher. So that is Barrick Gold. And let's go on to our third stock. So my third stock is going to be one of those recovery plays, which is on Carnival Corp. Now, with everything that's going on, with this corona and all these restrictions, there hasn't been any sailing for over the last 12 months, 14 months, so these guys are poised to get out there and start sailing, and as soon as they show some returns or any kind of income, revenue, the stock is going to do well. So our first bullish sign, we are about this 200-day moving average, which is a positive Our momentum on the weekly is also in the bullish territory, and we are heading down into this oversold on our stochastic. So these are all lining up for a possible another leg higher here in the next few months. So the targets that I'm watching, especially if we hold this 200-day moving average, you know, is my target 2 around this gap. So again, if I zoom in, you guys can tell that there's this gap over here about that $40 mark. So that is why I have this target set, which would be about 60% return. Now, if we go back up to the highs just before the pandemic here in the start of 2020, that's 100% return. And if we go back to the highs from 2018, you know, you are looking at 180% return. That is pretty damn nice. That's tripling your portfolio almost in the next few years. So that is why I'm bringing up Carnival. And my final stock is going to be a little bit more conservative than the previous ones, but this one is on TC Energy. Now, TC Energy can also be traded, so the chart I'm going to be going through is again on the TSX, but you can trade it on the New York Stock Exchange under the acronym TRP, or under the symbol TRP. So like I said, with TC Energy, I'm not looking for, it's not a huge play. Like, it's not like you're going to be doubling your portfolio. But why I like this stock is because, you know, over the last 20 years, it's been doing nothing but having this bullish, you know, nice pattern, nice movement higher, just grinding over the last 20 years. It is a solid stock, and I do like these kind of stocks, especially in my RSP, Roth IRA, and those kind of accounts. And as a bonus, these guys also do pay dividends of 5.62% on both the TSX and the New York Stock Exchange. So to dig a little bit deeper here, we see that our stochastic here, we do have some room to the upside, which is good. We haven't crossed over yet on our MACD, but looks like we might be. The momentum is slowing down, which is also a good sign. And just in general, we came off of this channel right here. We just broke about the 200-day moving average. So these are all bullish signs for me, and I think this would be a great stock to hold for 12 months, 24 months, you know, we'll see. Once we start seeing weakness in it, I'll be scaling out, but for next few years, I'm looking to get some dividends out of this stock and also cash in on returns of about 30%, you know. So again, not the biggest returns out of the 4 stocks that I'm showing you today, but it's definitely something that I feel really good about for the next few months. So that is it, guys. Try to keep it short and sweet. Hopefully you enjoyed it. If you did, smash that like button. Also, leave me a comment below. Let me know if there is some kind of stocks you'd like me to break down. Let me know if you think my analysis is good or if I'm maybe off on something. I'd love to hear from you. Thank you so much, and see you in another video. Peace out.